Good afternoon. I haven't seen y'all in like 4 minutes, 5 minutes. Now, the Judas Swing. Now, we was talking about Judas Swing when we started out on the other live stream. Turn my fancy dancing back on. I was getting ready to talk about the Judas Swing. Somebody reached out and was like, hey, can you do a video talked about the Judas Swing? I said, sure. Now, these are 15-minute candles. I'm using the lower time frame like this because the price action tends to play out, give more examples on the lower time frames. You tend to see more Judas swings, market maker buy models, market maker sell models, liquidity runs, order blocks, fair value gaps. You tend to see the PD arrays more often on the lower time frames. That's why whenever I'm trying to show something, I go to the lower time frames. Like I get that from Michael. You know what I'm saying? He teach it on the lower time frames to show you the concept, but you can apply it to the higher time frames. It just take a longer amount of time to play out. Like I was saying in the other video, how we're coming down to a monthly order block, and it's going to take a while for that monthly candle to close. So we're looking for, hey, where does this monthly candle close? We got 12 more days before this monthly candle closes. So it takes a longer time to play out on the higher time frames, but on the lower time frames, you can go in and see example after example after example after example of how it works. So the Judas swing, just like with any other PD array. Thank y'all for coming back. Not PD array, but any other concept dealing with ICT. It all starts with the narrative and the bias and the draw and all of that, right? Draw is king. Draw is king. Where do you anticipate price going? Right? Where do you anticipate price going? So, in this case here, what is price doing up until let's do this right here. Let's come back. I'm going to knock off all of this, and we're coming right before the London kill zone starts off. Right before the London kill zone starts off. So before the London kill zone starts off, just looking at this price action, just for this smaller amount of time that we're looking at. So we see price come down. We see price consolidating over here. We see it break away from the consolidation. Right? We see it push back up, fail to get to the imbalance, got heavy displacement down again. Come back, don't take out that low, push back up into this imbalance over there. All right, push up into this imbalance here. Do not get up into the top one. Come down, take out the sell side, push back up into the imbalance, take out the sell side again, push back up into the imbalance, come down, don't take out the sell side. Right, start to push up, come back into this imbalance, right? And we're starting to boom right here. Right, we broke above that high right there. So we got a break in market structure to the upside right there. So we're pushing up. Right, got heavy expansion and displacement up, get above that high. We've taken out that high. We retrace back down where into this imbalance right there and reject off of it. Right, we consolidate in here, shoot down to this imbalance there and reject off of it. We're still consolidating. Right, dilly dally. So at this point, now that we've gotten above this high and we're consolidating here, since we broke above this high right there and we closed above that high, we're anticipating price to come to at least that high. We got this high, we got that imbalance. So since we've come up with institutional sponsorship and taken this high and did not reject it, you look up and to the left, right? So we're anticipating price to come to at least this high, right? At least that high and that imbalance right there. So that's what we're looking at. We're anticipating that to happen. I'm just using this time frame only. I ain't looking at no other time frame. I'm just looking at this, just getting our narrative in place. So we're anticipating price to at least come up to that high, that time frame right there. So let's move through price. Now we're inside the London kill zone, right? You want to look for stuff inside there. So we're anticipating price to come here, right? We're anticipating price to come here. When you want price to come, okay, we'll talk about it after we go through this right here. Right. Push all the way through all of that. Now, boom. Go through. I want to get through all of the kill zones. All right, because we're back into the Asian now over here. So this completes this day. All of that completes this day. This is the London. This is the New York. Asian back over here. London, New York. This day is complete now. So we anticipating price to come above this high and at least into that imbalance. Why? Why did we say that? All right. I know you can say, hey, Tim, you had it up there. You know it went up there, but I didn't know exactly where it went. I just said, hey, this is what I'm anticipating here, anticipating then. Then when I fast forward through it, now you can see that it actually did hit that. Right? It actually did hit. I knew it went up, but I didn't know if it went. I could have easily said go above this high. Right? I could have easily said that. I could have, but I'm just saying it's above there and there. Now we got our narrative in place. We got our y'all know who I'm going to get. We got our put him over here. Picasso. We got our Picasso. You feel me? Right? We got Picasso. Picasso right there. This imbalance right there. That's Picasso. This high and up into that imbalance. So we go put Picasso at the green line right there. Right? Picasso. We're going to put Picasso up here. Just say we're going in that direction. Make Picasso big. Picasso. So the draw is up there. Judas Swing. How do you identify Judas Swing? And how do how do you identify the Judas Swing? So this is how you identify the Judas Swing. The draw is up here. All right, the draw is up there. So we're trading in this zone right there. We're trading in this zone, and then we break away from the draw. When you break away from the draw and then immediately reverse and start to get a break in market structure, and expect once you take out that high right there, since we're going down, right? When you come back on the opposite side of where you took off from and take out that high right there, that confirms the Judas Swing. But if you know your draw is here and you see price take off and immediately reverse, right? That breaking market structure right there on the 15-minute, that's your confirmation before you even take out that high that this is a Judas Swing. Right? The Judas Swing is nothing more than leading the market the wrong way and then quickly reversing. But when do you want to see it happen? Inside your kill zones, right? You want to see it happen. This is where, with everything, you look for it inside your kill zones, right? Because see right here, how we're consolidating here, coming into this kill zone right there, right? We're consolidating in the dead zone, coming to the kill zone, take off to the downside, and then immediately reverse. Judas Swing. Doop. Immediately reverse. You could have gotten long inside this down close counter right here on a lower time frame, because that's what I was talking about. You can anticipate it to be an order block. Once you trade back above that opening price, this is what I was talking about when I was like, you anticipate it to be an order block. This is more advanced. This ain't like for the faint of heart. But when price, you're anticipating Picasso is up here and price breaks off in the opposite direction, and then you shoot back up and get a break in market structure right there. Right? We get a break in market structure right there. Once you get that break in market structure there, right, you got a break in market structure here, And then you got this down close candle. So that down close candle right there, you can immediately treat that. If you like an order block trader, you can immediately treat that down close candle right there as an order block. And let's go down to a 1 minute, because that's a 15-minute time frame. That's 2 time frames down, right? That's 2 time frames down. Look here, this is, let me see, when did that, let me find out when that candle closed. Let's get when that candle closed so we can make it make sense. Let's get to when that candle closed so we can make it make sense. All right. So now that candle closed right there. Right, that candle closed right here. Still got a little bit of imbalance there. Now you know that candle, that down closed candle has closed. So let's mark out the. Okay, so this is the open. That's the open of that down closed candle right there. When price be going in real time, this kind of stuff you got to look at. So that's the open of that down closed candle right there. That candle has just closed, right? When you violate that price right there, you can automatically treat that as an order block when you violate that price right there, because the draw is up there and that breaking market structure has just given you your validation that price is going back up. Right. So boom, we violated that price right there. Come back down, coming down toward that fair value gap. Boom, came down to the order block right there, the 1 minute order block. Right, hit the 1 minute order block, pushing up, chopping up, chopping up. Right, we're in here looking for whatever your trading model is that gives you, you know, your type of trade off of. If it can be filling that fair value gap right there, it can be getting into the order block. It can, I'm just trying to find all kind of stuff for everybody, right? Filling that, like once we, what we said, once we violated that price, we violated that price here, right? So we can treat it as an order block. Now we came back down, filled in the imbalance there, stopped at the 1 minute order block. So you got a 1 minute order block there. You got the fair value gap that you finished. So whatever, you know, whatever your trading is, let's keep going, see if we can find something else for somebody else. If it gives another, I don't know, like it's giving much of nothing. You got a 1 minute order block there now. See if it gives anything else. Nah, ain't giving nothing else down there. Ain't giving nothing else down there. So couple opportunities there, like on the 1 minute there, that fair value gap. Coming down to that order block, that's the same thing. This right here, the same area. Give you a couple opportunities, like when you see ICT like add into his position when it's still in there, because he like, yeah, this is going to be that. That's what he be doing. That's kind of stuff he be doing. But back to what we was talking about of the Judas Swing. That's it in a nutshell, man. It's just leading price the wrong way, leading the price away from the draw, and then immediately reversing and taking out and giving you a breaking market structure. Right, lead price the wrong way, immediately reverse with a breaking market structure back toward the draw, and then that's the Judas swing. It's just simple as that. But you always want to be looking for any ICT things to unfold during kill zones. Right, you always want to look during the kill zones for stuff to unfold. Right, you always want to look during the kill zones for stuff to unfold. Let's go somewhere else. Like, let's find us another area. Another area. A lot scarier. Another area. They move that thing on me and I keep looking down there. Another area. A lot scarier. Let's go to, let's put the, I'm just gonna find another one. Okay, so 9:30 p.m. Let's just plop it down right here. See if we can see one in here. right? Okay, so looking here, there's another one right here in this price right there. Right, here's another one here in this price right here. Price is going. Let's squanch it up, see if we can see what's going on with price. Right, as you can see right here, price has come down and given you a break right there. Got a break in market structure right there to the upside. We got one here, right? But this one from there to there, that's the full parent move right there. Yes, we did take out a low there, go up there, and we took that out, but this is the lowest low. So from that high down to that low, that's the parent move for this break, because we had a break in market structure right there. From that high got broken because this was the lowest low at the time, and we broke that. So that's a break in market structure to the upside. Then we came back up here and took out the parent swing, because this is the highest high that's connected to that low, right? That's the highest high that's connected to that low. So we've taken out that breaking market structure. So the bias is to the upside. The bias is bullish from this point right here, right? So you got a bullish bias. If I get on the high, right, we got a bullish bias from right there. And that's a bullish bias. And then let's zoom into the kill zones. Right, so we're inside the kill zones, and we actually have two in this day. This one is not very active. The one in New York gave much more, but as you see, right, we come here, we consolidate, and notice, oh, this is a good example right here on the London. This is a good example on the London. Why do I say this is a good example? Notice right here, we're consolidating here. This one on the London would trip the person who doesn't have their bias in place, would trip them up. Why do I say that? Because it hit you with a 50. This is a perfect Judas swing, right? We're consolidate. We come up here. We take out buy side there, right? After taking out this buy side, we take out buy side here, and we come back, and then we break down and attack these lows, right? We got a breaking market structure there. We attack these lows right there. And what do we leave? We leave an imbalance right there with an order block right there. So if you don't have your Picasso in place, you'll be like, hey, we took buy side, came down, got a breaking market structure to the downside, left for imbalance. We're going to trade back up into that and sell off. Yeah, this first 15 minutes, you were smiling. And then you started crying. Why? Because we sold off and immediately reversed and got a breaking market structure right there. Judas swing, sold off, immediate reverse, breaking market structure right there, traded back down into the imbalance right there. It went down on the lower time frame for something. Looked like we even touched the high of that order block. Yep, came right down to the high of this order block right here. Boop, and then pushed up. Judas swing. It didn't go far. It just went there. Now coming over into the New York kill zone. All right, what do we do? Failed to take out that high after taking out buy side again. Came down to the downside, right? Made equal lows. Oh, this looks so tempting. Look at all these relative equal lows over here. They setting this up so beautiful. We got an imbalance right there. The thing in your mind is we just took buy side. Let's trade back up into this imbalance and then sell off right there at 9:30. Oh, look how they trick you. It hit it and then start coming back down. Then what happened? Bust you in the head. Judas swing, right? The draw is up there. Picasso resting up here somewhere. Right? Took off to the opposite side. Immediately reverse inside of a kill zone. Judas swing. That's how you identify the Judas swing. That's how you identify it. Now with a Judas swing, a lot of times they move fast on you, so you have to change your time frames to like get an entry. A lot of times you have to change your time. Like once you get the confirmation on the higher time frame, a lot of times you have to drop down, just like how inside this down close candle right there, you could drop down after that candle prints. Boom, you can drop down to a lower time frame looking for an entry over here. Right, if that ain't safe enough for you, once you get the breaking market structure right, once we break through that high, then you can drop down to a lower time frame and start looking for a lower time frame entry. Let's do that. Let's see if it offered anything. right there, because on the this 15-minute candle, so this candle is going to be printing, right? So let's go down to a 1 minute, because that's 2 time frames down from there. So when we came, let's see, let me go back to 15-minute for a second. So this is the break here. So let's see what candle went across that. This is really the high right there. That's the high right there. And then the other one is right next to it. So now let's go back to the 1 minute. Okay, so boom, we hit it on that very first candle, that very last candle of that 15 minutes. So as soon as you break through there, now you're looking there, you got down, this consolidation should protect price. You got a little bit of a fair value gap there, and you got a volume imbalance there, right? Volume imbalance there. So going forward, pushing up. Now we got an imbalance right there on the 1 minute. All right, see if it offer anything. No, didn't give nothing there. All right, didn't give nothing off of that one. Consolidated again. Did it get? Nope, didn't give it. This one here running up. It did it. Nope, it didn't come back. Didn't come back to the imbalance. You got the imbalance there. Now that we've made this right here, you if price is showing that it want to go, you want to go with it. Oh, yeah, came back that time. Came back there on that one. Do it come back lower? Nope. That's it. Yep, that one there. That was the one. It don't come back lower after that. Yep. Didn't come back lower after that. So it was that one right there. But sometimes you have to switch your time frame to like get an entry on them Judas swings. Sometimes you got to switch your time frame on them Judas swings to like get an entry. Anywho, anybody got any questions on that? I just randomly picked some times to go look to see if it was some Judas swings there, and hopefully I was able to explain it better. I think Alpha was the person who asked about this, and hopefully it helped out Alpha. Any questions about the Judas of the swings? Any questions about the Judas of the swings? Or any questions about anything at all before I call it? Was this worth coming back for? Did this help in any kind of way? A lot of stuff that seems like very elementary to me. People be like, hey, I appreciate you for doing this. So I'll just be trying to put my feelers out there to see if, if it's helpful or not. Yay or nay. Okay, what's going on here? I got some stuff showing up. Oh, these are lower time frames. That's why it's got stuff in here. These are lower time frame charts. Stuff that used to be on there that I don't need no more. What is this? Okay, I'm gonna have to do it this way. All right. Really good breakdown. No, that was very good. Okay. Thank you. Glad y'all found value in it. I'm trying to get this stuff over here. Rectangle. Okay. No need that. What line is this? Oh, that right there. All right. Okay. All right. I'll just clean that up a little bit. All right. I'll was just cleaning it up. So got some more time frame stuff that was still on the chart. Didn't really need to be there. All right. Okay. Yeah, that's everything. All right. Appreciate y'all for hanging out with me, man. About to go ahead and call. Is the PIMDAS hiker? Is the PIMDAS hiker respected on all? Yes. Yes. Everything about the PIMDAS chart is respected on all time frames. Now, the way you just like anything with ICT concepts, SoCal, everything is all about like the bias and the draw. Right? Everything about the ICT concepts, it all comes down to the bias and the draw. Let me come on, man. Hey, SoCal, get off my screen. So put this on daily. Let's put it on daily. And then hide this. So with the PIMDAS chart, okay, let's go to a monthly first. God dog it. Go to a monthly first. So we're gonna go to a monthly time frame. So I can show you this here. Like, remember, I don't know if you saw, have you saw part 5 of the Learn to Trade Futures video? I talked about this in there. If not, here's a quick refresher. These monthly candles right here, right? Price came down, took out this sell side liquidity. All right, price came down, took out this sell side liquidity. Price came back up, took out this buy side liquidity right here. Once we took out this buy side liquidity, that gave us a breaking market structure to the upside. Right, they gave us a breaking market structure to the upside. So in here, let's just start with the consolidation first. We took out this sell side liquidity, and then after taking out the sell side, we started consolidating. Right, we started consolidating right here. We just go down. Okay, so we started consolidating here. So we started consolidating here, these monthly candles. We took out sell side, started consolidating there, and this is the buy side right there. So we're consolidating. When you're consolidating, that's letting you know you're at an area of equilibrium. Price consolidates at equilibrium, right? When you're consolidating, that's price letting you know that you're at an area of equilibrium. Okay. That's the equilibrium of this consolidation area. Okay, follow me? Now, on the price leg that came down and took out this liquidity over there, right? This price leg. Where is it? Oh, price leg right here. So that price leg right there. So that price leg right there that came down and took out this sell side, looking at this price leg over here, in this price leg down, coming down there, we're coming down. So let's just play devil's advocate and say that this volume imbalance, right, was enough of a displacement to qualify this here as an order block. Right. Let's say it was enough to qualify that as an order block. Once we came down here, pushed back up into it and sold back off, right, we took out the sell side again. So there's one example of it coming back up to an order block. What was there, right? Once we came down there, left this little imbalance right here, coming back up, right? Coming back up. What was in this range besides this volume imbalance and this order block and this rejection block and this old high, right? So we got a rejection block up here from that high to that body right there, because those bodies are relatively equal in the sense of the word, right? We got the volume imbalance and you got the order block, right, coming down. So you got a volume imbalance, an order block, rejection block, an old high, right? Is there a mitigation block there? No. Is there a breaker there? No. Is there a liquidity void there? No. Is there a fair value gap there? No. Is there an order block there? Yes. Boom. Hit the order block, sold back off. Right? Hit the order block, sold back off. Consolidate, 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 right? And we take off. Now we've already hit this order block. That order block has been used. So going back up, we got a used order block, which we can very well still hit again, right? Coming up this time, is there a mitigation block? No. Is there a breaker? No. Is there a liquidity void? No. Is there a fair value gap? Talk about this entire leg down there. No. Is there a bearish order block? Possibly, but we've already traded into it and used it. So since we already traded into it, used it, the likelihood of it rejecting price again after soaking up all this liquidity and then getting institutional sponsorship behind you is very unlikely. Is there a rejection block? Yes, it is. Got to the rejection block, reversed. So it respects it on the higher time frames. It's the order of importance of it, so it looks for it as it's going along. And just like how we talked about when I was marking up the charts, we were talking about as we came down to the weekly, I think it was. No, it was the monthly. As we came down on the monthly, right, we were coming down here, we was pushing down, and as we were coming down, we got the first thing we got to was a fair value gap, right? Where's the fair value gap in the order of importance? Up here. You got mitigation blocks, breakers, liquidity voids, fair value gaps. So coming back down, the first thing you hit was a fair value gap. What do we have below this fair value gap? We got a breaker, an order block, and an order block. So we got a breaker down here, an order block, and an order block. What's the highest level of importance out of everything that we got down here? Right, this breaker right there. Right, that breaker right there is the highest level of importance of the PD arrays that we got down here. So when we come to that fair value gap and reject off, it's highly probable for it to come to the breaker because the price is coming and seeking these. This is the order it's seeking it in. Now it can very well react off of that fair value gap like it did, but it's more probable for it to come to the breaker, because since the breaker is the highest priority that's in this area, is more likely that it's seeking out that breaker on top of repricing this imbalance. Just like if it was a mitigation block down here, it would be more probable for it to go to the mitigation block while taking care of that imbalance. And this is on the monthly time frame. And when we came down to it here, boom, right? We came down into, when we're inside the wick of that order block, we're inside the wick of that order block. We're inside of a lot of stuff here, right? We got a lot of PD arrays there and prices reacting off of it. But now that we've come down to the breaker, now it's time to see what price wants you to do. And then you have your levels that you're watching. You got the mean threshold in the open of the order block. And then you got to remember, you got a mean threshold of a breaker. All right, you got a mean threshold of the breaker, but you don't want to see, I don't want to see price get down to the mean threshold of the breaker. I want to see price get held up by this order block right here and reject off of the order block. Did that clear up any questions for you, SoCal native? Did that clear up any questions for you? Oh, and if y'all did not know, matter of fact, let me do that right now. If y'all did not know, futures for beginners, right? If y'all did not know, there is Beyond the Azure Blue. There is a link in the description for those videos that says download slides, and you can download the slides. Part 5 PDF. Part 5. Wait a minute. What's my? I didn't save the PDF. Oh, I didn't save the PDF. Let me do that. Let me save that PDF. You can download the slides. So let me save this. There is Beyond the Azure Blue. God concealed from human sight. Future for beginners. Save as a PDF. No, I'll do this right here. Save as PDF. Be taking a long time. I do it like that sometimes. I don't know why it be taking so long. Like it, sometime it'll crash. That was like a glitch back in the day that it had, and then now it just be taking a long time. Amen from the congregation. I appreciate that. I hope I'm glad I was able to shed a little light on something for you. Yeah, it's still working. While I'm waiting on this to save, does anybody else have anything? Like I say, if you go into the there it is. All right, save futures part 5. Hit save. All right, so here are the slides for part 5. I closed it on the wrong screen. I don't like when I close it on that screen because it pops it up on that screen, and sometimes, well, I don't really turn it off like that anymore. But here's the slides for part 5 right here. And that's the PDF right now. And if you click on the link, it's the slides for all part 5s. And the link is in the description of each one of the videos. Let me check it and make sure I'm saying it's there, but let me check it and make sure I ain't telling y'all nothing false. Your videos. Right there. Learning futures part fever. Learning futures part fever. Apex join. Oh, wait a minute. Wait a minute. Oh, you know, I don't think I updated the upload link. It should be like in the first ones though. Let me check the first one. Download slides. Yeah, I'm like, I know I put it somewhere. Let me check this and make sure that's the link. I know I put it somewhere. I'm like, I know I ain't tripping. So I'm gonna close that. Yeah, now that's closed. I'm gonna come here and paste that. Yes, there you go, right there. That's the link. Now let me go make sure I put it in all these videos. In all the videos. So that's one. Part one. Put it in the intro. Make sure it's in the intro. Download slides. Save. All right, part two. What's part two at? That's part three. Part two. Part two, part one and two had it. I guess I just forgot to update it. Part three got it. I guess I forgot to update it on part four. Part four got it. All right, and part five. Yeah, I forgot to put it on a couple of them. Look like. Say, but yeah, the link to download so you can have the slides if you want the slides. All right. I guess I didn't need to hold y'all around for that, but I was just waiting to see if anybody had anything for me. But since we don't, go ahead and call it here. Hopefully y'all understand the Judas Swing a little bit better, understand how to use it a little bit better. If I was able to shed some light on it, I done did my job. If I wasn't able to shed light on it, I'll try my best next time. Till the next time I decide to jump on Al Gore's internet. Y'all be safe out here in these trading streets, man. Big Spider gone.